Good morning, traders. Today is Saturday, June 24th. And there has been a macro pattern this week that I missed. What you're looking at is actually December 14th through December 28th. I want to call your attention to the red check marks on the screen to get your bearings on. The gray-blue bars up here is overnight. Yellow is pre-markets. White is intraday trading. From December 14th through December 28th, all big moves came in pre-market. Here, 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 there. Well, I even forgot to check one there. What is the point of showing you this? That's what happened this week. They are replaying the December 14th through 28th pattern. What they do is all the big moves are happening overnight / pre-market, not intraday. Okay? You're going to see a lot more detail of that. Look what happens. Overnight down, intraday, Overnight down, intraday, okay. So-so. Overnight down, intraday, so-so. See that? Big moves. Here's the big move up, intraday, so-so. Big move down, and then intraday down even more, right? But then it came back up, wick up, basically flat, right? Down a lot more, came back up, flat. Okay? Down, and then up, then down, but more or less flat. Okay? So, it goes big up and then flat, intraday, right? Big down, down even more, and then back up. Okay, so you're going to see this in a lot more detail in the coming slides. But let's first get to the daily chart. Okay, guys, we have bearish negative cross right now as of Friday. Look at the RSI. Down, now dipping below the 30 line. Okay? You got to be careful of this. We don't know. So let's look at this scenario when it had a negative cross, slight negative cross, but then it curled back up. But keep in mind, this was during the upswing phase. We're coming off a peak now. Okay? Keep that in mind. Yes, it can and does and has negative crossed, up, 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 up. Well, consolidate, 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 and then boom. Okay, it can do that again. But remember, this phase was during the consolidation phase. This is the daily chart, guys. This is in May. This is consolidation. This is the peak. Okay, so you can't really exactly compare that. You can't compare. Well, this negative crossed and then it positive crossed again. Yeah, you can't quite compare like that. It's not the same. Okay. So here's the weekly chart. Here's the weekly chart. We now have it dipping below the 70 line right here, the green line. See that? Just keep in mind what has happened once it dips below in the past. You have another down week, right? You dip below and then another down week. So can it dip below and go back up? Yeah, but right now the evidence doesn't suggest it's going to do that. I'm going to show that to you, okay? All right, tweeted this out yesterday. This is a proposed target, 426 to 427.50, right in here, right in this range. Zoom in. 426, 427.50. I think it's going to be somewhere in this range. That's where market makers ultimately heading to. This line right here is goes parallel to the hive parallel. Okay, it's not the hive. Here's the August 16th high, 431.73. Yeah, I think it's going to go on past that. Okay. And this green line is the former megaphone top that we were tracking to in May. Okay? See, so, and this goes all the way back down to the June 17th low. Okay, so I think it's somewhere in this range, because what I suspect the market makers doing, see, this whole week was more or less intraday. Well, overall, it was a grind. It was a grind down. It wasn't just bam, big red candle, holy, and S&P lost 1.5% today. No, it wasn't that. Okay? So I think it's going to grind, and then I think at some point a sinkhole is going to open up. Boom. Okay? The sinkhole, I think, will happen intraday. Okay? That's what I think is going to happen. All right? So, hold on just a minute. Okay, had to pause the video for just a moment. Okay, so yeah, that's what I think is going to happen. It's going to grind, and all of a sudden, boom, there's going to be a cliff. But then it's going to find itself somewhere in this range, because I think it's going to convince everyone, oh, see, we're going to crash, right? Because if we kind of just slowly grind, bottom out, and then go back up, that sounds too easy. Okay? It sounds too easy. So, anyways, that's what I think it is. This is my proposed target, 426, 427.50. Okay? So, last week, back on June 16th? Oh, no. Last Friday, not yesterday. We actually hit the hive right there, that at the peak. Not right at the highest point, but it did hit the hive. This line goes parallel to the hive, okay? Because this uptrend is actually tracking to this hive parallel line. It's just recently it just started going parabolic, but I think it's going to go back to the line. All right? Okay, so all right. Let's get into some details. Let's check this out. Well, I don't think I need. Well, I'll zoom in. This is Friday, right? Not yesterday, but this was Thursday. Here's the peak. Thursday's the peak. This is Friday. This is Tuesday when we came back. Remember, Monday we were off. Look at that. Open, close. See? Open, down, up, close. That's not that much of a difference between open and close. Okay? Let's check out Wednesday. We'll just call this open, down, up, down, close. That's not that much difference. Look at the moves overnight. Look at the moves overnight. Now, obviously this Thursday was a big difference. But in the end, since the overall trend is down, you lost even more in the morning than when you started yesterday morning. You see that? We came back even lower Friday morning than we started on Thursday morning, even though we had this big move up. Now, but let me finish this thought. This was yesterday, Friday. Open, close. So you see, this whole week, with the exception of Thursday, the whole week, the open and the close price is basically the same. Essentially the same. We were trading in a range every day this week except Thursday. Now, why did Thursday tumble? Because Thursday here failed to make a higher high than the previous high on Wednesday. That's why. 436.99 to be exact. I was tweeting on that. I said, you guys, it's going for 436.99, 436.99. It got to 436.86, something like that, upper 80s. It got up there in extended hours, but as we know, it intentionally held back because it intended to go down the following day. So you guys, look. Okay, so this is Friday. Look at that, big drop, right? Big drop overnight. But then the Tuesday we came back. Oh, even bigger drop. Came back up, and then boom. Almost essentially. Oh, it depends on where you are. I think the open could have been actually Yeah, this is too small to see. The open could have been right here, right? Because it could just fall at open, come up at opening bell. I don't know, but it's roughly the same. It's roughly the same. Okay, so there you have it. Now, what also perplexed me this week, because since I don't trade overnight, I don't trade during the overnight hours, I didn't really pay much attention to it. But specifically talking about intraday, NBD, no bearish divergence. Down, up, down, down, up, down. See that? There was no bearish divergence. Market maker just took it up and said, you know what? I think I'm going to rip it down now. See what I mean? So, no bearish divergence on the MACD. Up, down, up, down, up, down. I mean, it was just up, down, up, down, up. So, intraday wise, now I'm talking about intraday only. See, like here. Up, down, up, down, up, down, up, down. There was no bearish divergence. The market maker, because this is a downtrend, or temporary downtrend. It's a temporary downtrend. The market maker just decided to cut the tape. Right there. Just, oh, okay, that's enough. Also, yeah. Also because it doesn't want to make higher highs than the pre-market or the previous day. Well, in this case, here's the previous day. You're not going to get up there. See what I'm saying? Look at that. Way up. This is previous day, guys. Overnight. This is pre-market. You are not going back up there. Okay? So, yeah. That's why I was perplexed this week. Because I was looking more at intraday. I didn't give it much thought, since I don't trade, overnight. So I was like, what is going on here? It can't pick up steam. But when I now look at the macro picture and the overarching trends, now this makes sense what's going on. Okay? Okay. Now, this is a tweet from Thursday. I want to call your attention to something because you're going to see it in the next tweet. This will make more sense the next tweet. It made higher lows here compared to here, right? On Thursday. This is Thursday. This is a 65-minute chart. Here is obviously higher than here. But what happened in extended hours? Like in the first 10 minutes, I was watching it. Lower low. So now you see the market maker's trick. Oh, higher low. Higher low. Nope, lower low. But I want to show you, I'm going to show you, you're going to see something in the next slide actually. That's like, what the heck's that mean? But what happened on, this was Thursday. When you made the lower low, we came in Friday and gapped down. Right here. Yeah. Gap down. Okay? Now, here's the same Thursday. Right here. Lower low. And then gap down. Okay? But watch this. He made a lower low in the afternoon. We all know that. Yes, this is yesterday. 65-minute yesterday. But look what happened here. Higher low. Now, yeah, let's just see what happens. I think future Sunday night, could say, no, you're going lower. Okay? So, what the market maker is doing is it is intentionally not allowing the 65-minute MACD to either cross the zero line. See that? See this? Nope. Nope. Here it did, but it got stuffed at the... Wait. It's not allowing it to cross the signal line here, here. Here it did cross the signal line, but it did not cross. It stuffed it at the zero line. So those are two lines of resistance. It intentionally stuffed it. It's like, nope. You are not going to go on a run, bud. Because if you do, that's making higher highs than the previous high then. It's intentionally stopping the 65-minute MACD from crossing that zero line and or the signal line down here. That's why it's allowing it to keep going lower and lower and lower. Okay? So, that's the moral of that story. And this is the last slide. This was actually, oh yeah, 6:15. I was right originally. I thought, no, it was kind of long ago. Thursday, the 6:15 peak 44389. I focused too much on the 65-minute, which is there's no bearish divergence on the 65-minute. Ironically, there wasn't any. And I stopped looking at the 5-minute, which I normally look at intraday for trading. Higher highs, lower highs. Okay, so that's bearish divergence. It was actually right in our faces on that Thursday when it peaked. It was right there. So there you have it, guys. So yeah, I think we're in for some more down moves, and I think it's gonna psychologically, the market maker is gonna have to convince that, you know, the traders that, oh yeah, see, we're going down, and then that's when it's gonna rip it back up, reverse it. Not just gonna kind of grind down, flatten out like a cup and handle. Not gonna kind of go down, flat, up. No, that's too easy. That's too easy. That's too easy. Okay, so you can expect some more of this hocus pocus like we saw from December 14th through December 28th. Go back and look at the pre-market hours if you want to review that, because if you start seeing more of that this week, what my plan is to do is just to scalp the calls intraday, then turn around. And if I see that it's not making a higher high, I'm going to try to get puts and hold it overnight. That's my general strategy. Okay, general strategy. All right. So, please feel free to follow me on Twitter, where I give real-time tweets intraday, or as much as I can, depending on my schedule. Don't forget to listen to your favorite music while you're trading. Helps you get into the right state of mind, helps you get into the right flow state. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 000 signing off.